Gold prices remain depressed amidst federal government closure and $33 trillion negative debt. On Monday, 11/13/2023, gold prices continued to linger at their lowest point in 3 weeks, while borrowing costs retained their surge from the previous week in the bond market. This followed Moody's downgrade of its outlook on U.S. debt by $33 trillion to negative and the rejection of House Speaker Mike Johnson's plan by both Republican and Democratic politicians to avert a U.S. government shutdown this weekend. As reported by Atsuko White House at Bullion Bow, the price of gold in U.S. dollars closed at $1,937 per troy ounce on Friday, marking its lowest level since mid-October, with a 2.7% loss for the week. This occurred against the backdrop of the Federal Reserve and other major central banks committing to maintaining higher interest rates for a more extended period in response to persistent inflation. U.S. government bond prices sustained a decline from the previous week, keeping 30-year Treasury yields around 4.7% after borrowing costs surged by 15 basis points following an auction of new bonds that failed to attract sufficient demand from lenders. Major traders, committed to buying any unsold debt, had to accept nearly a quarter of the proposed $24 billion in new debt from Washington. Simultaneously, traders noted that a ransomware attack on the U.S. division of the largest Chinese bank may have contributed to market apprehension. Moody's revised its outlook on U.S. public debt from stable to negative on Friday, citing the significant increase in debt service costs, surpassing $1 trillion annually, and the continuing political polarization ahead of the 2024 elections, where former President Donald Trump is speculated to run against incumbent President Joe Biden. The U.S. government, now carrying a total debt of $33.7 trillion, has seen a 7.3% increase since the beginning of the year. The majority of this growth occurred following the debt ceiling agreement at the end of May, designed to prevent an immediate government shutdown following the mini-crisis. In regional bank stocks in the U.S., gold and U.S. dollars has risen by 7.1% in 2023 thus far. With the May agreement set to expire on Friday, Johnson proposed a stopgap over the weekend to fund certain federal agencies until the new year. However, Republican and Democratic politicians rejected his plan, with Republicans demanding spending cuts and Democrats labeling it overly complicated. The decision by Moody's to alter the U.S. outlook is a new consequence of Congress Republicans' extremism and dysfunction, stated a White House spokesperson over the weekend. In response, Johnson, the lead Republican in Congress, criticized President Biden's spending program as reckless and a danger to our national security and economy. Gold prices in euros and pounds sterling dipped by 0.1%, hitting new 3-week lows at €1,814 and £1,582 per troy ounce, respectively, as the dollar index stabilized ahead of key consumer price inflation data this week. Silver prices took a harder hit, dropping 0.9% in dollars to reach their lowest level in a month, standing at $22.05 per ounce. Meanwhile, Brent crude oil prices stabilized around $81 per barrel, roughly $2 higher than last week's 3.5-month low. The latest OPEC monthly report highlighted the market's disregard for healthy oil market fundamentals, as speculative operators overlooked them. Moody's currently stands as the sole AAA rater for U.S. government debt, following Fitch's downgrade in August, aligning with S&P's 2011 downgrade, coinciding with historic highs in gold prices at the time.